Did you hear about that family with the daughter with special needs who fought the IRS in tax court and actually beat the IRS? It's a great story. Let's talk about that and some other things today as I talk to you about Medicaid waiver and taxes. Hi, my name is Bill Scharf, and I'm an IRS enrolled agent. My certificate's right up there in the corner in case you want to see it. But I've been an IRS enrolled agent for over 20 years. My wife and I used to be tax programmers at a major tax software company, and Medicaid waiver was never important to me until it was important for my son with special needs. I want to talk to you and everybody else out there, both the tax preparer and the parent, because there's a lot of misunderstanding and there's never any training. In 20 years of being an IRS enrolled agent, I've taken hundreds of hours of continuing education and never once seen or heard anything about Medicaid waiver. It's unique, it's interesting, and it's very much to the benefit of people like me and maybe people like you. So let's join me. I call this presentation Fee Fi Fo Fum. This could change your refund. Before we get started, I want to explain to you who I am. By day, I'm a tax programmer, or was a tax programmer, and now am a programmer for the state of West Virginia. I've been an enrolled agent for a long time. My wife has also been an enrolled agent for a long time. We love taxes so much that we took the EA study exam material on our honeymoon. So that's how geeky we are about taxes. My little guy Jacob is there in the corner. He's 14. He's enhanced with an extra chromosome, and we love him to death, but he qualifies for Medicaid waiver. I don't do taxes. Some people ask me if I'll do their taxes. Maybe when my son needs a little less help, is a little older, maybe I will, but not right now. So let's go to what we're going to talk about today. The basics of a tax refund, what IDD waiver is and waiver in general, history, the actual court case, which is the turning point of this whole thing, what the IRS eventually said about the court case, which was not immediate, and we're going to talk about some kind of ancillary things like payroll taxes and respite care. Before we get started, I wanted to make a quick disclaimer. Please don't sue me. This is the best of my ability. I've researched this, but always check with the IRS. Always go to the IRS publications, the forms, the instructions, the letter rulings, the actions on decisions. All those things are much more important than anything somebody like me is going to tell you. So let's start with a very oversimplified view of a tax return. A guy named Bob has taxable income. While he's making that from during the year, either on his W-2 from his employer or he has his own business, he's paying somehow throughout the year the tax due on his income. At the end of the year, Bob settles. He may get some money back from the IRS. He may actually have to pay the IRS some money. We've all understood that for a long time. Tax deductions and credits fall in there, and a lot of people get this very confused. What you need to know is a credit is always better than a deduction. A deduction lowers your taxable income. Maybe if you're taxed at 20%, for every dollar of deduction, you save 20 cents. Well, 20 cents is good, but for every dollar of a credit, you're going to save a whole dollar of tax. That's a lot better. So credits you think might take your tax all the way to zero, they actually, and here's the magical, confusing thing, they can take your tax below zero. So what does that mean? Here on the screen, I have some images from the 1040 Schedule 3 where it talks about non-refundable credits and refundable credits. A refundable credit means that if you have zero tax and you have this extra credit, well, it comes to you in the form of a tax refund. It may not be a refund by dictionary definition because you never put that money in there, but it'll come back to you as a tax refund if it's a refundable credit. Well, next question obviously is which credits are refundable? Well, there are a whole lot of credits out there and nobody's going to go over them. But the two I want to talk about today that are refundable are the Earned Income Tax Credit, EITC, and the Child Tax Credit, CTC. Sometimes EITC I abbreviate as EIC. It's the same thing. Those terms are interchangeable. So this applies to IDD waiver and other forms of Medicaid waiver. This slide's primarily for the tax preparers out there who may have encountered this for the first time. Some W-2s will actually be sent out to the family member caretaker that have a 0 on box 1, but they have a whole bunch of other numbers in all the other boxes and codes in line 12, and so it gets confusing even from the taxpayer's preparer's perspective. But the purpose, and this is how I understand it, is that when you have a disability, you need extra care. That takes more resources. If a person is disabled enough that they cannot live by themselves and there's nobody to take care of them, then there are institutions that the government set up. Usually, the results from institutionalizing a family member are less favorable. In some cases, it's the only choice. In some cases, it's a better choice. In some cases, it's the best choice. But overall, it's a win-win-win for everybody. The state can save money by compensating the caretaker. The caretaker can live with the individual who's disabled. That individual who's disabled can be in a more loving family environment on average. And this program also provides Medicaid for the disabled person regardless of income. I'm not a millionaire, but if I were a millionaire, my son would still qualify for Medicaid. So my wife does the care, and of course I do plenty of care for my son, but she does the care on paper, and she gets compensated in the form of direct deposit from the Medicaid Waiver Program. The Medicaid Waiver Program also will pay respite care. That means depending on if you go through an agency or if you're yourself want to choose the person, a person to come in to give those family caretakers a day off, or maybe not even a day off, maybe just an hour off so you can go to the dentist, or 30 minutes off so you can actually take a bath, because it can be very stressful. There are 4 types of Medicaid waiver. I have them down here. There's the adult disabled one, there's the emotionally disabled one, there's the developmentally disabled one, and there's the traumatic brain injury waiver. And my son qualifies for the IDD waiver, the developmentally disabled. There's a link at the bottom there. You can go there to find out more information. They've really done a great job expanding that website in recent years. So, quick outline of how these were treated. These payments that my wife would get, first, they were considered normal taxable income. Just like if you had a job, just like if you worked at Walmart or in an office or wherever, there was a normal job, you got normal taxable income. Then in 2014, things changed. This 2014-7 IRS notice came out, and this is where you will find the term. It sometimes is abbreviated DOC. It's difficulty of care. It is how the IRS pronounced that these payments are actually non-taxable. So the IRS assumed they are non-taxable income. Non-taxable is usually unearned. So it is income that you get that is non-taxable and unearned. Now, what's unearned? Unearned is a really weird way of saying for all these credits, you didn't earn any income, so you can't get the credits. If you get unearned income, you cannot get the earned income credit. It's kind of in the name, but a lot of us don't think about it that way. The IRS doesn't do a great job of figuring out, let's create a bunch of rules for Medicaid waiver. They shoehorn it in this Section 131, which is really designed for adoption credits, or adoption payments. If somebody were to adopt a child and get payments from the government somehow, state, federal, local, That's how the adoption payments are supposed to be treated, and they shoehorn the waiver stuff in there as difficulty of care. There's a link here. I will post this on our Facebook group for West Virginia waiver families, and you can find me on Facebook to or email me wherever however you want to get a hold of me. There are links that I'll give you all my information. I'm not making any money off of this. I spend a lot of time every year trying to do this for our community. It's my way to give back. There have been a lot of parents coming before me. I won't mention their names, but a lot of them know who they are, who have really helped us to navigate the world of Medicaid waiver, the world of disability, the world of Down syndrome. So going on here, we have in 2014, it was non-taxable earned income. Then in 2016, they doubled down and explained that even better. 2019 came. This is where the Fee family said, hey, we're going to take these credits. We believe that we get the earned income credit. We believe we get the child tax credit. We believe we are entitled to these credits. The IRS said no. But they fought and they won. So in 2019, they actually won. The court case was originally a couple years before 2019, but the ruling came out in 2019. The 2019 ruling, it was retroactive for the case, but there's usually just 3 years you can go back. So there was some confusion there at that time as to how far people can go back. But we're long since past that. Usually you can only amend 3 years back. So that's what happened in 2019. In 2020, the IRS seemed stunned that they lost. So there was 1 to 2 years of no guidance from the IRS. They deleted the information off of their FAQs. They removed some publications, and there was just nothing out there. The IRS was stunned. They didn't know what to do. There was no information, but they had lost this court case. So they had to figure out, do they appeal it or do they keep at it? And eventually in 21, they have what they called an action on decision, which means the tax court came down with the decision and their action on it is no action. Their action is to not appeal, to give up. In 2022 and 2023, they further clarified things like the payroll taxes, the Medicaid, the Social Security. A lot of times those are just abbreviated FICA. And the IRS eventually declared whether you can you have to take all of it or none of it, but you can do it per person. We'll get into that in just a minute. But that's the overall history. Where it is, it's still kind of, for the last 2 years, hasn't changed much, which is very nice. It allows tax preparers to actually get educated and tax software company to catch up. I've been preparing my tax return and tax software before, where they said they supported Medicaid waiver, but they were not up to date. So I get all the way to the end, and I'm waiting for an update for a month from a certain tax software company because, yeah, they support the entry of it, but they didn't do the calculation correctly. So the Fee case, there she is in the corner. That's our hero right up there, Tasha. She the things around her neck. She's a Special Olympian and has won many medals. So in 2015, remember the tax case wasn't settled to 2019, but on 2015, they attempted to get the earned income credit, and the IRS said, no, this is unearned. You can't get the earned income. And the amazing thing is they didn't have some high-priced legal team. They didn't have an army of lawyers. They had a free tax clinic from the University of Minnesota. And I've actually corresponded with one of the professors there on the case. They were ecstatic. I mean, think about basically professors and students beating all the IRS lawyers in court. It's a great day for them. Here I have a link to the whole tax case, the court case. I'm sure that there's like one person out there in the world that'll want to read it, and maybe two if I'm lucky, so I won't go over it. And there's a link on the left-hand side here that'll show you exactly does a great analysis that exactly drills down on the points in greater detail. But we're not going to do that. We're just going to take a little snippet here. I'll read it for you here. It says, fee was an unusual case to be sure, but its lessons are worth heeding. The service, meaning the IRS, the service's power to take away congressionally provided tax benefits is limited. So what it's saying is the IRS cannot take away earned income credit and child tax credit. It says a sub-regulatory notice cannot be used to overturn the plain language of a statute if that plain language is beneficial to the taxpayer. So it's saying the IRS can't take away these benefits to families like mine just through a sub-regulatory notice, which is what happened. There's no law on the books, so to speak. So this, like I said, is retroactive to 2015 because of the court case, but people could usually only go back 2 years. It's 2025 right now. Please don't go back and try to amend your 2015 tax return based solely on Bill Scharf's word. So here we go, and this is what happened in 2020. The IRS finally gave up. They said, action on decision. There's the link if you want to read the whole thing. The final paragraph is important. It says it will follow the fee opinion in cases in which a service permits taxpayers pursuant to the notice to treat qualified Medicaid waiver payments as difficulty of care payments excludable. So that means excludable from income tax. Excludable that these payments that otherwise fall within the definition of earned income. Fall within the definition of earned income in Section 32C3 are not earned income for determining eligibility for EIC and child tax credit merely because they are excludable under the notice. Notice being that difficulty of care notice. So that's kind of when they officially gave up, was 2020. But in 2021, here's where they removed the language on their frequently asked questions page, but they didn't offer any guidance. They seemed to be just stunned that they lost in court. Frankly, I would be too. The IRS doesn't lose in tax court very much. But they did this time, and I'm not unhappy that they did. I received, so here in this question 9 with the answer, you'll see what it was later when it talks about I received these notices. Can I choose to include them in EIC? And eventually they said, oh yeah, but it wasn't added very quickly. It says here added May 8th, 2020. That's a typo. It wasn't added at that time. But it's interesting that the IRS didn't seem to want to acknowledge that they lost very quickly. So how does this affect you? What is EITC or EIC, Earned Income Tax Credit? As you can see here, there are, I'm going to try to show you with my mouse. I don't know if this will work. But Earned Income Tax Credit, you have to actually earn income. If you make absolutely nothing, then you cannot get Earned Income Tax Credit. There are a whole bunch of other things, like you have to have a Social Security number. You have to be of a certain age. You can be too young or too old, and we're not going to go over all that. That's something I could shoot you a link to if you need it. But I want you to see that it's not exactly a bell curve here, but it goes up, 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 hits a maximum plateau based on your marital status and how many kids are in your house, and then it goes down. So even if you're making $40,000, $50,000, maybe even $60,000, you might still qualify for some unearned income credit. This chart is a couple of years old. This is the newest one I could find. It goes up a little bit every year. If you go online and look at EIC chart, you Google for that, you'll find some numbers that'll be higher than this. But if you look at that $20,000 to $30,000 range, a lot of times that is the salary or the total payments that somebody, a guardian or parent or whoever is the caretaker for the disabled person will get. is right in there at that 20 or 30,000, and that's really close to the highest amount. So for that single mom that maybe can't work because their child is severely disabled and needs round-the-clock care, this can be a lifesaver of getting. You see here that the amounts, if you have 3 children in the house, it could be over $7,000. So that's a very much a non-trivial amount. Here's another example. This kind of simplifies it. This is for one child, one guardian, maybe parent. And you can see here it goes up, plateaus, and goes down. And if you can get into that middle area right there, this was 2023 again, of 11,000 to 21,000, you will max out your EITC. And there are a lot of other charts on the internet, but these are the ones that, and I've tried to document where I got them from, so you can click on a link. These are the ones that I think are good. The child tax credit's a little bit different. If you make even a small amount of money, generally you get some. But it jumps up real quick, plateaus, and this is a year old, so the amounts may be a little bit different. And once you get into the pretty high income, there it's close to 500,000, it will phase out somewhere. What is that? Maybe between 4,000 and 480,000, somewhere around there. It'll phase out, so you'll get less child tax credit. So how can the EITC or the you might see CTC is child tax credit, or ACTC. ACTC is the refundable part. That's the advanced child tax credit. Some years there are limitations on how much that can be refundable. Some years they're not. I think for the coming up tax season, it's all refundable, but it's gone back and forth in the last decade a couple times. So be sure to check on that if you're watching this in future years. So these can actually take your tax due down below zero. So if you have a zero tax liability, you get $5,000 of EIC, then you will get $5,000 for the government. It's not really a return as much as it is a payment, but we in this country have a history of using the tax system to also be part of a welfare system. So whether you like it or not, it's that's how it's been for a very long time. And the final point I want to make here is that the child tax credit, not the advanced child tax credit, but the child tax credit itself is non-refundable. And something called the ODC, that's when you have other dependents, like maybe you have a 20-year-old still living at home. They can still be a dependent, but they're not a child. That does not qualify as a refundable tax credit. So there's a link down there for a 1040 Schedule 8812 that can help you with that. So I'm trying to move quickly. You guys are always welcome to email me, find me on Facebook. I'm on some other social media platforms, but I really just use Facebook and YouTube occasionally. So what about respite workers? A respite worker, in our case, for a while, and I didn't update this, but, I guess I did. My 13-year-old employed his grandma. The older she got, the slower she got, and the older my son gets, the faster he gets, and he likes to run away. So she had to take a step back this year, so she's no longer our respite worker. But it's a fascinating situation. The way they set it up is the person on Medicaid Waiver actually has an EIN. They are the boss on paper, and sometimes my son's the boss in real life. But he employed his grandma. She was an employee. She got a W-2 with figures in box 1. She had it was taxable. She had income tax, Social Security tax, Medicare tax, all these taxes for a respite worker. That is completely normal. It's like they had a job anywhere else. So don't worry about all this complication. A respite worker is just really a normal employee. So let's look at where it's actually listed. It's listed a little bit less this year in the 1040 instructions, but at least it's listed. When I first started doing these things, it was just ignored completely. So we actually have a line on 1D, Medicaid waiver payments not reported on Form W-2 Box 1. Now, some people will say, "Oh, this is not taxable. I'm not going to include it." And is the IRS going to come after you and put you in jail for that? Probably not. Some people will even say, "Hey, all I get is this waiver income, and it's not taxable, so I'm not going to file my taxes." Please don't do that, because you could be missing out on those thousands of dollars of credits. And if you're going to file, why not follow the instructions here? The instructions say line 1D is for Medicaid waiver payments not reported on W-2 Box 1. I've put it all right here. It's real easy. There's actually a line for it. It's a lot easier than it used to be. There used to be some ways, some tax software would have you put a positive number in one place and a negative number to subtract it out in another place. But now it's a lot easier. There's actually line 1D. And then when you go in on page 43 of the instructions, and these page numbers could change. This is based on the December draft of the 1040 instructions. So please don't complain too much if this actually changes. At this moment, at the end of December, the instructions are not finalized, but I wanted to get this out to everybody before tax season starts January 1st. Technically, I think you can file your tax return January 1st, although the software companies e-file is usually not working on the IRS side until maybe February or so. So page 43 has a place for you to enter the amounts that you want excluded from income, unless you choose to include these amounts in earned income in that case equals 0 or enter 0. So there's a whole worksheet here. This is not just one or two things. It's a little bit out of context. But what I want to focus on is this tip. This tip down below. It says, if you and your spouse both received Medicaid waiver payments during the year, you and your spouse can make different choices about including the full amount of your payments in earned income. See, if I get Medicaid waiver payments and my wife gets Medicaid waiver payments, we have the options. We could include all of it for me. We can include all of it for her, or we could include none of it for me, none of it for her. And starting 2 years ago, the IRS made this tricky rule where we could actually include mine and not hers, or we could include hers and not mine. So there are options there that if people want to do some tax planning a year ahead of time, maybe you want to reduce your Medicaid waiver payments a little bit. And if there are two parents in the home, you can actually, one of the parents can do some of the work and one do the other, and you could try to plan that out ahead of time. I've never seen anybody use that tax strategy. Usually if there are two parents in the home, one of them's working, and that would make this a little trickier, but still possible. So, write, comment, send me an email if you're using that tax strategy. I'd love to know about it. So jumping all the way down to page 92, there's these detailed instructions for line 8S. This is the non-taxable amount of Medicaid waiver payments to include. This is something that is good to have. It's in the instructions, but your tax software should manage a lot of that for you. What your tax software do, and I'll hit this again at the end. Your tax software will probably, if it has a place for you to designate Medicaid waiver, your tax software will allow it to be non-taxable. That's usually what I've seen. But your tax software will not do the can it go for EIC or can it not, because it has to calculate that both ways and tell you which is better. That programmatically is usually very difficult. I've never seen that implemented in any tax software where it'll do both ways and tell you which is better. The only thing that's similar to is combat pay, which when I was a tax programmer, we worked like really hard to get that for combat pay for a year, to calculate a tax return with combat pay and without combat pay, taxable and for earned income, and it was very complicated. So I don't think that it will be something high on the list for tax software companies. So jump into West Virginia. If you're watching this outside of West Virginia, go ahead and skip ahead. But the West Virginia, this is the West Virginia IT 140. It's our tax return. You'll see down there at the bottom of the screen, right down there, if you look, where's my finger? Down there. So federal or adjusted gross income is where it starts. Now, there are later adjustments, but so far I haven't seen any adjustments that say to add in Medicaid waiver payments. So it starts with federal adjusted gross income, which does not include the Medicaid waiver payments. If it does not include the Medicaid waiver payments, then it doesn't show up on the West Virginia personal income tax return, period. A lot of people will say, oh, well, I got West Virginia withholding, so it must be taxable to West Virginia. Well, if you had West Virginia taxes withheld, then you'll get them back because this isn't taxable. I explicitly, now this isn't recent, but 5 years ago, I explicitly wanted something in writing, and I got an email from the tax help that they probably were as confused as a lot of us were, where they're like, what's Medicaid waiver? But they looked it up, they researched it, they got back to me, and they said, yeah, Medicaid waiver is excluded completely from the West Virginia return. You might say, well, what about the earned income? Well, there is an earned income-ish thing for West Virginia, but you have to understand that it is different. And your state may have a bigger earned income credit, and this may be a bigger factor, getting the credits and having income count towards those credits. I have friends with through our Down syndrome organizations that live in various other parts of the country and even parts of the world, and a lot of stuff differs between states. So be sure to look it up. I haven't done a lot of research in other states, but in this state, the earned income exclusion worksheet is for very low income. That's $10,000 a year. So if you get more than $10,000 a year, you're probably not going to be able to have this. And if you work 35 hours or however many hours a week, it depends what you do with the travel and stuff like that. But you're probably well in excess of this 10,000. So this probably won't apply. Let's skip it and go on to something better. So in 2022, the IRS, somebody explicitly wrote to the IRS, and IRS letters are not law, but they can be used to back up your case in tax court. The IRS, I have a link there to this letter, and the IRS said, hey, you have to pay FICA, you have to pay Medicare, you have to pay Social Security, you have to pay these taxes. You can't just be exempt from them. And they're going on about you have to pay, you have to pay, you have to pay. And then they said, except if there's an exclusion under Internal Revenue Code sections 3121 B3 B I through 3. Now, I'm sure everybody's just running to the Internal Revenue Code and looking that up. Because you really have no life like I do. But no, it's since 2023, it is now explicit in the IRS instructions that you can make different elections. We touched on this just a couple minutes ago. A spouse can count it while the other spouse doesn't. But with per person, with the spouse or the taxpayer, you have to include all or none per person. So I can't include half of mine and 10% of my wife's. I can include all of mine and all of hers, but I can't include some percentage. A lot of people I've seen posted think that they can report however much they want as earned income, and it's everything or nothing per person. So this first point on the screen, the I through III. So those exclusions are specifically for domestic employees. We're going to get to that here in a minute. But domestic employees usually are people that you might think of like a nanny, a butler, a maid, or somebody like that. That's usually what you think of. But in this case, it also applies to those of us who care for our disabled loved one inside our house. And a lot of us, I dare say the majority of us, will have an exclusion for FICA. But it's really, really confusing. And I have here in yellow, I apologize that the video is blocking some of it, but let me read it for you because this is really important. That's why I have it in a really ugly color. Please understand that if your tax software has a place for waiver payments, that does not mean it calculates the taxable income correctly. It may, it probably will for the majority of the cases, but a lot of times it's not worth a tax software's company's time to spend thousands of dollars and pay their programmers to do a lot of stuff for a program that's pretty small. So I've yet to see any software out there that will decide if these payments should be included in EIC and CTC. If you are the parent or guardian that gets the payments and you are doing your tax return yourself using tax software or by hand, God bless you if you're doing it by hand, but you need to try it both ways. Run the calculations all the way through once, run the calculations all the way through again. If you're a tax preparer, you're not off the hook. I talked to a person. I contracted with a software company last year and worked with a person who also had a son with Down syndrome who came from probably the highest costing tax software company in the world. And she said their system didn't run it both ways. So I worked for more of the Chevy in the market. She worked for more of the Cadillac in the market. We were both working for what may be the Tesla of the market, and none of these companies did it automatically. You must try it both ways to see which way is beneficial for your family. A whole lot goes into that. But what about those exemptions? Remember that I through I? What the heck does that mean? So here's the actual code because I'm not going to memorize this. So I want to put it here on the slide so I don't misinterpret it. But there's certain things like, well, if the service is performed by a child under the age of 18 and they're employed by its mother or father, I don't think that's usually the case in waiver. I don't think you can even be a caretaker if you're under 18. They have to do a background check for the waiver program here. And then it goes into these other details. I'll let you read that for your own. I'll let you, if you want my presentation. But I do want to take a minute to pull up this, because I think PALCO, they didn't have this at first, but PALCO really did a good job of putting this in a form. They didn't have it at first, but are you 18? Are you a spouse? And then they talk about non-resident alien, your age, your biological. No, something I want to point out. Biological, adoptive, step-parent of my employer. Think about that for just a minute. If you think about that, biological, adoptive, or step-parent of my employer. Think about it. If you're a grandparent, if you're an aunt, if you're an uncle, if you're a cousin, if you're a sibling, does that include you? What if you're a grandparent that's never adopted the child, but has raised the child since the disabled child was, a day old, and you're the only mother and father you've ever known, that child has ever known? Well, you might have to pay FICA because it says here, biological, adoptive, step-parent. It doesn't say grandparent. I've tried to help and explain this to other family members in our online support group because, unfortunately, it doesn't allow an exemption for FICA. unless you are a parent. So, we're going to finish up here. I meant to keep this under about 40 minutes. I'm going to run over. Sorry about that, guys. So, if you have only Medicaid waiver, I put wages here, wages and payments. I use interchangeably. I probably shouldn't. But if you have payments that are non-taxable, why do you file? Yes, you can get the refundable credits. Those are good. You saw the ones up to $7,000. I mean, you could get $10,000 if you're in the right situation with the right amount of kids in your house. Why would you chance that you want to get this money that the government, and this is not Bill Scharf being one of these people that, hey, the government has a check for you, just sign up. No, this is the law. This is some people just not signing up for things that are obviously benefiting the rest of us. And if you have any questions, I'll be glad to help you. If you want to reach out to me, you can. If you want to reach out to the IRS, I actually have in here the email from the lawyer. I hope she's not retired yet, but the lawyer who wrote the action on decision and the difficulty of care letter. So the other thing that you want to file a tax return for is the IRS can only go back 10 years. On average, in normal cases, IRS can go back 10 years and say, hey, Bob, hey, Sally, hey, Johnny, you owe us money. Now, when does that 10 years start? It starts when you file your tax return. So if you haven't filed since 1970, guess what? The IRS can still come after you. I'm helping a loved one right now in my family trying to navigate this. And they filed their tax return years late. The IRS just sent them a registered letter. The registered letter was for a tax return due 12 years ago that they filed years late. So the IRS is still trying to collect on it. So please go ahead and file. If you never get a refund and your tax return is simple, there are free or almost free options out there. There are IRS VITA centers or VITA centers, VITA. Those are staffed by volunteers all over the country. My church, Bible Center Church, has an outreach center called the Makers Center in Charleston, West Virginia, near where I live. And at the Makers Center, they host one of these VITA centers every year. And they're a great place you can go to get your taxes done for free. Simple taxes. Please don't come in there with 3 shoe boxes of receipts from all your businesses and expect them to be able to handle that. Another question I get a lot is, well, Bill, just tell me what buttons to click. The problem is that the tax software could do this differently. And it may get more complicated because right now, this is fresh off the presses here in December, but PALCO, which are maybe the payroll administrator, I don't know what the proper term is, but PALCO is the company that handles the distribution, that handles the payments for if you are doing this not through an agency. If you're doing this through an agency, then that's different. Then you're an employee of the agency. But if you're doing this through PALCO, PALCO says they're not going to do W-2s anymore. If you don't have anything withheld, you're not going to get a W-2. So what do you do if you don't have a W-2? Well, you can use your pay stub. You can use your pay stub and still enter it. But if you walk in to a tax preparer's office with a pay stub and you say, here, enter this in their software, they don't know it's from Medicaid Waiver and they will assume it's taxable. They have to, with no other evidence to the contrary, and it will mess up your tax return. It'll probably lower your tax return. So I am trying to write letters, convince PALCO to issue us those W-2s so that we as individuals know and the tax preparers can do their job better, because without those W-2s, it's going to be hard. So the question of how do I do this with XYZ software may be even crazier if we don't get W-2s. But I showed you in the instructions, there are specific lines for Medicaid waiver income, and you can go and enter it on those lines manually, not through the W-2 screen anymore. So a question I get sometimes, and I'm sure this has happened to everybody in life, hey, so-and-so is just like me, and they got a better refund, or they got audited, or I got audited and they didn't. Almost every single time when you dig into those, there is a difference. Maybe they didn't pay their taxes. Maybe they didn't pay enough of their taxes during the year. Maybe they had some interesting stuff on their tax return. What I have been hearing from my tax preparer friends is, because we are unicorns, because we have these options where we can count the difficulty of care payments one way or another, that the audit rate does seem to be a little higher. And that's another reason why I really, really am begging PALCO to issue us those W-2s. Because when the IRS audits us, when a state audits us, it'd be nice to send in the W-2 instead of trying to beg PALCO for some sort of information to explain that the pay stub is for non-taxable income. So if anything's not clear, or if I got anything wrong, please comment. Please send me an email. I get things wrong all the time. You can ask my wife. But I want to just be out there to try to help us. This is something that I could do to navigate our community through a hard situation. I've leaned on so many other parents where they have some expertise in something. And this is my way to kind of, maybe just pay it forward a little bit. There's some documentation from public partnerships. That's one of the biggest waiver-related companies. There's an actual interview that was in the University of Minnesota, like law journal type thing, and NATP blog post. That's the National Association of Tax Preparers. That is, or tax professionals, maybe. That's an organization where you don't have to be an enrolled agent like I am, or a CPA, or something like that, but they encourage you to be as educated as possible. Miss Driscoll, I talked to her on the phone years ago when I started this. She allowed me to give out her personal email address. Now, she may have since retired. I haven't communicated with her in a number of years, but I want to give that out. If people need to talk to probably the IRS person in charge of the case, that was her. So there's action on decision. The Medicaid waiver payments frequently asked questions has just come so far in the last, 4 or 5 years. It is so helpful now. It started out as something that was almost silly. So that's really all I have. If you're like me and you have concerns about those W-2s not being issued, please voice your concerns to PALCO. And please hit me up if you have any questions, anything I can do to fix this, to make it better for other parents, anything you didn't understand, please tell me, because this is all about parents helping other parents. Thank you. Have a great day.